Asian markets experienced a significant downturn on Monday morning, triggered by the Trump administration's imposition of tariffs on Mexico, Canada, and China, fueling anxieties about a rapidly escalating global trade war. The Taiex in Taiwan plummeted by 4% at the market opening, with the semiconductor giant TSMC suffering a dramatic over 6% plunge. Japan's Topix index witnessed a substantial drop of as much as 4%, heavily impacted by major exporters with significant exposure to global markets, particularly Canada and Mexico. Companies such as Samsung and LG, prominent electronics manufacturers, and Kia Motors, a major automaker, all felt the brunt of this negative market sentiment. China's stock markets remained closed for the Lunar New Year holiday. The negative impact extended to European markets, with futures contracts declining sharp 4%, following President Trump's press conference statement indicating that European Union member countries would be the next target for tariffs. This announcement sent the euro tumbling, reaching a low of $1.0125, representing a decrease of as much as 3%. Trump's actions on Saturday fulfilled his earlier promise to impose a 25% tariff on goods imported from Canada and Mexico, with a notable exception of a 10% tariff was also implemented on Chinese goods. This punitive measure was justified by the administration as retaliation against immigration and illegal drug trafficking originating from these countries, according to the president's statements. The White House confirmed that these tariffs would become effective on Tuesday. This aggressive move has already provoked retaliatory measures from all three targeted nations. Canada's Department of Finance swiftly published a comprehensive list of U.S. products imported into Canada, slated to face a 25% retaliatory tariff, commencing on Tuesday. Mexico's President, Claudia Sheinbaum, also pledged to implement retaliatory tariffs, while simultaneously emphasizing her government's development of a Plan B, asserting Mexico's desire to avoid direct confrontation. Trump's bold move represents the opening salvo in what could potentially evolve into a devastating global trade war, potentially leading to a sharp surge in U.S. inflation. Paul Ashworth of Capital Economics predicted that such an inflationary surge would come even faster and be larger than we initially expected. Reuters contributed to this report. The uncertainty surrounding the escalating trade conflict and the potential for further retaliatory measures continue to cast a shadow over global markets, raising concerns about the long-term economic consequences of this escalating trade dispute. The potential for further escalation remains a significant concern for investors and economists alike, prompting widespread analysis and speculation regarding the potential ripple effects on various sectors and economies. The ramifications extend beyond immediate market fluctuations, encompassing broader implications for global supply chains, international cooperation, and overall economic stability. The evolving situation underscores the complex interdependencies of the global economy and the significant impact of protectionist policies. The unpredictable nature of the situation leaves room for various scenarios, each with its own set of potential consequences for biz. The detailed analysis of the situation reveals a complex interplay of political, economic, and geopolitical factors, highlighting the multifaceted nature of international trade and the potential for significant disruption. The ongoing situation demands close monitoring and further analysis to fully comprehend the potential long-term effects on global trade dynamics and economic growth. The magnitude of the economic repercussions remains a subject of considerable debate and ongoing assessment, emphasizing the need for a comprehensive and nuanced understanding of the intricate web of interconnectedness within the global economy. Furthermore, the potential for unforeseen consequences highlights the inherent risks associated with protectionist measures and the importance of fostering collaborative solutions to address global challenges. The impact extends far beyond financial markets, potentially affecting social and political stability in various regions globally. The gravity of the situation demands a comprehensive approach to understanding and managing the potential ramifications of this escalating trade war. Experts continue to analyze and debate the various potential outcomes, emphasizing the dynamic and unpredictable nature of this evolving international crisis. The continuing uncertainty underlines the need for proactive measures to mitigate potential damage and restore stability to the global economic order. It remains imperative to closely monitor the developments in this unfolding situation and its multifaceted consequences. The potential for lasting effects on the global economy necessitates a comprehensive response to mitigate risks and foster a more stable and sustainable international trade environment. The long-term implications of this trade conflict require sustained attention and analysis to fully understand the potential repercussions and to develop appropriate strategies to navigate this increasingly challenging landscape. The unfolding events underscore the urgent need for international cooperation and diplomacy to de-escalate tensions and prevent a wider global trade war. The uncertainty and volatility present significant challenges for policymakers, businesses, and investors alike, requiring careful consideration and adaptive strategies to navigate this complex and rapidly evolving situation. The future trajectory of global trade and the world economy hinges on the resolution of this conflict, making it a critical issue that requires sustained attention and decisive action from all parties involved.